What up, guys? I hope everybody is doing well. I wanted to make a video to help you to navigate turbulent or choppy markets. This happens constantly, consistently. You can always count on it being bumpy. It will be bumpy all the way to the top. Be prepared. There's a lot of ways that you can look at this. You can look at this as just simply understanding pivots and bottoming processes and buy and hold and not worry about it. If that's what you want to do, that's one way that you can do it. You can just avoid worrying about it at all. But if you're going to do that, you should at least know how to identify tops, because if you can identify bottoms and you're going to hold, you should be able to identify tops. So that's what you would want to do with that. If you're trading, you need to decide what you're going to do as far as time frame, strategy, system. There's all types of different ways to exit near the top. It really depends on you. So you have to figure out what it is that you want to do. You can hedge and stay long during the oscillations that dip. You can use classic stops. You can do quite a few different things. And I'm going to show you a few different strategies. So you kind of need to ask yourself right now, what is it that you're trying to do? Now me, I have a hodl and I swing trade and I do day trades and scalps as well. So I have multiple accounts, multiple strategies, and I divvy up my money a certain way. I do have conviction and hodl, and with that, I simply, once I get to the daily with the green lights, I'm simply just gonna stay in, just like if I were to, buy right here when it went green. Let's enlarge it for you just a little bit here. Okay, it went green. And this is blue, it has to be blue, and so you buy on this candle at 10,384 and you just stay in the whole time it's green until it goes pink, and the next time it goes pink, which was right here, so you exited at 58,303. Simple. That's buy and hold, high conviction. I don't want to do anything, but you have to understand just this little dip is going to be painful. Just this little dip is painful. This dip is really painful. This bigger dip is painful. This is painful. This is painful. All these down days are painful, but you're still in an uptrend, okay? There are down days in an up market. It will be bumpy to the top, okay? Let me show you something really quickly. So if you go over here to the indexes and you go to the Dow and you're on the daily, this is where we bought. So right here when it was falling and it was extreme fear and everybody's freaking out, I said it's gonna be a double bottom and this is where it's gonna be. And right when it pivoted, I made announcements, made videos, and we bought right there. We also bought on the June bottom low line, and then it came down further. We bought more here, it went up. When it came down, I said stay in, bought more here on this fib line right here, okay? Just like this was a fib line for this peak. Now, there has been a lot of down days between this bottom and this arrow to current, right? There's been a lot of down days. So what have I done? Well, for my hodl, my high conviction that I wanted, like Tesla, Nvidia, Bitcoin, I identified the bottom and I've just held, okay? I know that it's gonna be bumpy on the way to the top and it's gonna go a lot further. It's just gonna take time. The variable is time. So one thing you can do, if that is what you're trying to do, is really do nothing, but you do need to understand how to identify tops. So you would probably want to learn a little bit about distribution and volume, and maybe have an indicator like our Jedi green light strategy, where when this went pink, so you can see right here, when it went pink right there, the very next time that this goes pink is pretty much right here. And you get out and yeah, you miss a couple days, about a week before the crash. But that's a good strategy, okay? It kind of lets you know the tops. Another good one is, let's just go back to Bitcoin. Another good one is having something like this one at the bottom. Okay, as soon as it goes over, the blue goes over the pink right there, you buy in. So it goes over right here at 10,606, which is only $200 away from the green light strategy. And as long as this blue stays over the pink, right there, it dipped down, it almost crossed, but it didn't. And you just stay until right here. And we'll follow it up to right where this yellow line is, which was 59,974. So one simple indicator, one simple trend. If you're going to hold or hodl, that's your strategy. Then don't worry about the choppiness. Just know there's a lot of down days in an up market, just like there are up days in a down market. But know how to identify the bottom and know how to get out at the top, and have something like our Jedi green light and pink light strategy, or something like this, our bull run indicator, that gets you in and out. Okay, now let's look at things that are a little bit more advanced. So this week we had a lot of choppiness. So we've been trending up. Okay, we're certainly making higher lows and higher highs. Okay, and we're doing that on the indexes. In fact, the indexes not only are making higher highs and higher lows. Now this is kind of a double top and a triple top. We got to get past this zone right here on the Dow, but we are above the 200 on the daily on the Dow, and we're above it on the weekly on the Dow. That's good. Okay, we do just need to get past this yellow line. That's important. Okay, so your Dow is above the 200 on the daily and the weekly. Your SPY is above the 200 on the daily and the weekly. Okay, your NASDAQ is above, it's right at it, it's retesting on the daily, and on the weekly it's also above. Let's go look at the Russell. On the Russell, on the daily, you're above, and on the weekly, you're above the 200. Okay, so because you're above the 200, and the 200 is the line in the sand, below is bearish, above is bullish, you're at the beginning. That's the accumulation phase. Now, market makers, they are going to push it down. Media is going to push fear, and things are going to come out of the woodwork no matter what. So to be prepared for that, there are ways to handle it, multiple ways. Now, depending on what your strategy is, depending how fast you want to get in and out, really comes down to you as a person, how much active trading you want to do. You might want to be the hold guy, you might want to be on the daily. Well, let's say you're on the daily, you can use that Jedi green lights I showed you, you can learn to identify bottoms, but you can use the sync system. Okay, when you're low in the channel, you're down by this purple line, and this dot crosses and the line goes over, and the baseline goes over, and this blue line goes over, and you're low in the channel and cross here, and you're starting to go up in volume. All those things cross, and you get your first blue volumes, and you can just kind of hold in. But you're getting a rejection, and to me it was obvious. In a couple videos ago, I had made a video saying we might come back on Bitcoin and retest the 200. How did I know that way over here? Okay, first of all, when you're above this purple line and you get a red dot, it's not good. Okay, red dot, and this is below the line, it comes down. Red dot on the line, it comes down. Red dot way above the line, it comes way down. Also, it's good when you get the blue dot below the line. So I knew there was a red dot, but sometimes it braids at the top. Let me show you one recently that's done that, just so you understand. Here's Avalanche on the daily. Okay, Avalanche on the daily had the pink dot here, but yet it still went way up. So sometimes they will make the pink dot and you won't see black space between here, and you'll get a blue dot, a pink dot, a blue dot, and it'll braid at the top. That's okay. There's still momentum. Volume is still over, okay? However, you have to pay attention to what's going on. You know that you have a pivot high here. You know that you have a 200. You see that you're at the top of the channel here and on your stochastic, okay? So as you come up, you end up trying to break out and you don't. You reject on the 200, you reject on the pivot, you get a circle, which is a false breakout on our indicator, and an institutional sales diamond. Now, if you're holding, you still have the green light strategy and you can trust it and just hold. But if you wanted to exit earlier, if this thing ends with a pink dot like it did and you get a little gap like that, which happened right here, and if you notice, everything synced opposite. So just like I had showed you on Bitcoin where everything synced at the same time to go up, everything synced to come down, okay? So that's how you know if you're trading, you need to get out. So then what you need to decide is, do you want to sell your avalanche and risk how far it could come down? So then you need to start looking at how far it could come down. So you were way over here at 2107. It got as high as 23. You were down $2. You knew it was going to come down. Now you're at 1789. So how far can it go? Well, the next stop would be right here at 1650. And then you would have a stop at 1572, and then you would have a stop at 1437, and below that is back down to its low of 1050. So you have to decide if you want to take your gains or if you want to trade. Now there's a few ways to do this. Number one, I just showed you how to identify how to get out near the top, okay? So now let's say you want to trade. That's cool. You exit, you have so many signals here that says to get out. You're rejecting on a 200, you're rejecting on a resistance, you have a false breakout, you have institutional sellers, your HMA is pink, and look at the candles are changing colors. The confluence is showing a lot of sell pressure. That's why the colors changed over here, okay? So now what you can do is you can decide to get out, and then you can wait till all these come down and reverse sync and you can get back in. Let me show you a different way that's more simple to look at it. Okay, this is Webull. Now, on the daily on Webull, the cloud, so when these two cross, this is my blue cloud right in here, and this line on the top is the price action. So right now, if you were to buy, if you were to notice what I'm gonna teach you, so you would have bought loopring right here at 19.5 cents because they crossed and price action's above. You would have stayed in, even though this came all the way down through the 5 EMA and through the 9, it didn't cross them, did it? So you just stay in, you're just patient, again, through the 5, through the 9, back up, pulls it way down. But even though right here, I gotta move my mouse, but even though right there, it didn't cross with the black. So even though this dipped and got scary, it did not cross, okay? Crossing meaning like cross right here where the green one goes under the blue. It got close, but it didn't do it. And so then the price action pulled it back up like a threading needle or a shoestring, and off you go. The cloud is still going. So you can identify when to stay in, and you can identify your temperature based on time frame. Right now you get a lot of mixed signals because there's a lot of sideways action. I'm going to walk you through and I'm going to show you a couple things. Okay, ApeCoin over here said to get out at $5.87, and now it's at $5.34. The clouds crossed and they're still crossed on the daily. However, if you wanted, you could be on the hourly, and notice that at $5.06, you got to re-enter and you're playing the hourly game. That's what I like to do. I like to trade in and out, not on my hodl, on my trading stuff, and I like to do it on the hourly, okay? This is the way that you can do this, and you will always get in a better price on the hourly and out with more gains on the hourly than you will the daily. However, you will also trade more. You have to pay taxes every time you sell, and on the daily, sometimes these things can go for a long time before they actually cross, so you do less trading. So as an example, let's just go to Bitcoin. Okay, this is Bitcoin, and I showed you on TradingView, but just to simplify things, you see a cross right here. I already drew a line. You got in at $16,679. That's basically where I made the alert. These two crossed and you're in the cloud. You've been in the entire time. There was a dip, Okay, it almost came down to the 5, but it didn't cross these two lines. You stayed in. There's another dip, came all the way through the 5, touched the 9, bounced off it, and double topped, came down far, and it got them to pinch. It went up, and then when it went down and you saw that first little bit of black space was about right here. So you have to sell, if you're on the daily, at 22,929, and you bought in at 16,679. So that's $5,200 per Bitcoin, something like that, $5,200, just being on the daily and buying these crosses. Now, if you want to protect your capital and it becomes turbulent, this week was quite turbulent starting Thursday. And it was a little mysterious to why, and I have now figured out why. It's about 8 or 9 different reasons. Number one, you have the Adani Group. You had Hindenburg Research put out a short seller report claiming criminal fraud, and Adani is on multiple exchanges, has a ton of employees. They're in the energy sector, and a lot of people invest in them in multiple countries for infrastructure. So it was announced Thursday that Adani might get delisted from multiple exchanges. Immediately, Wall Street getting that news and being deeply invested, they're going to start pulling money out of anything attached to Adani. On the same day, Credit Suisse, which is a big one, okay? They launch companies, IPOs, they're like a Dreyfus or a Goldman. They have a lot of funds, they have a lot of businesses, they're invested in a lot of things. Credit Suisse had a horrible earnings and they're attached to a lot of things. When Wall Street gets that news, they're gonna be pulling a lot of money out. They're gonna pull a lot of money out on Adani and Credit Suisse all on the same day. Now, meanwhile, you have news of multiple balloons from China, weather beacons is what they're calling them, and they're on 5 different continents, and they have passed over 40 different countries. And you're getting talks of NATO allies talking about this. That's scary, because if there's one thing that's going to make me personally abort, even at some form of a loss, if I have to, will be that we're going to war with Russia or China. I'm not saying we are, I'm just saying that's enough right there to kind of not be in the market. And nothing else really is gonna scare me right now. Okay, so you have that in people's minds. Credit Suisse, people are attached to. You have Adani, that's big. And then you have, on top of that, you had Thursday a massive schedule for earnings. Hundreds. I don't know if you looked at the earnings schedule Thursday, but there was hundreds of different earnings reporting, and it was from the morning session and aftermarket, and it was across a ton of industry groups. It wasn't just like big tech or financials, it was across a ton. Traders don't like to trade around earnings, especially after we just went through the layoff cycle, and we might be coming into a deceleration of earnings, possibly worst case an earnings recession. So now you have Adani, you have Credit Suisse, you have the geopolitical situation, and you have massive amounts of earnings. On top of that, you have high frequency trading and algorithmic trading just selling off everything as these big guys are dumping shares. Okay, so now you have that going on with the algos bringing everything down, and you have stop losses getting hit, which adds more pressure to go down. So everything goes haywire. So now we're in a choppy market, and the way to handle that is when you're in this big uptrend and you're watching it, you simply come over. You've already decided who you are. If you don't care about the volatility, you're just going to run the whole bull run. You're still making higher highs. You just don't worry about it, or you're going to protect your capital and rebuy. So if you decided that you bought here, you made your 5,200 per Bitcoin, you see that it crosses, you exit. You let it come back down, and when it threads back up, you probably buy back in right about the same price, and you just kind of protect your money. If you want to be tighter, what you do is you back it down to the 1 hour. Now, let's just go take a look on the 1 hour. Actually, let me show you something else really quick. So, right here, it said, you crossed and it said to sell at 22,968. But when you go down to the hour, you actually, this is where it happened over here. Okay, you're still in the cloud, the green is above. Right there is where it crosses. Okay, this is on the hourly. This is how I like to do it because you protect your capital even more. You're getting out at a higher number, 23,215. Okay, you're $400 higher or so. Okay, very close to the top. It crosses, and now you just wait it out the whole time. It's still just, and that is going sideways. It's not crossing. You don't ever want to trade in a sideways market ever. That is the kryptonite for trading. Don't trade in a sideways market. If you get caught up in a sideways market, you can do a couple things. One is just hold and do nothing. Two is you can hedge it. You can put, you have your long going and then your short with the same amount, and you just put stops on both sides. So when it does find a direction, one stop gets hit and you let the other one make up the difference and then run. So this is sideways, you don't want to get in. But when you do want to get in, and this is Bitcoin, is when the price action goes through and the green crosses over. So that happened here at 21,690, and now look at you, you're at 21,844. So now you have literally bought in at 16,500. You sold pretty much at the top of this peak, and now you're buying in when you're getting the momentum at 20,000, about, just call it 21,700, a little bit lower, okay? And I entered this trade, okay? I waited the whole time and I entered it, and now I'm up about $144 per Bitcoin, okay? So to avoid the volatility and the choppiness, you would have to be awake a lot, okay? Especially if you're in crypto. If you're in stocks, you do need to be awake in pre-market, after-market, and during the market. To do this, you have to be a savage like me. You have to really be into protecting your portfolio. And one thing that I do is I don't go too crazy on the over trading with, like, when I do this. So my hodl, I just kind of don't worry about. I just exit the tops or exit on the daily, okay, with the Jedi or these clouds. If it's on the hourly and I'm trading, which is what I do a lot, I just enter here and I just wait for it to do its whole thing until it crosses again, and then I exit. And then you can short, you can definitely do this. You can short when the green one goes below, and you would have shorted all the way from 23,221 all the way to 21,694. Yeah, you're looking at like $2,400 if I'm doing the math right. That's like a $2,400 short. That's probably what Bitcoin went down. So right now it just got enough momentum to the hourly. Now you can do this on the 5-minute. You can do this on the 30-minute, the 15. You can do it on all of them. Okay, that becomes more like day trading, scalping. But what I've learned over time is that if you're trying to do swing trading, but get in low and protect your capital, when it gets choppy, you're gonna know on the hourly, and the hourly gives the market a little time for digestive periods, and you know, hopefully you don't get one of these huge crashes, okay? And that's why you would have a stop loss no matter what. But you're really not using the stop loss to get stopped. You're using the stop loss as, you know, it's all hell is breaking loose, capital protection, and really just trading the crosses and monitoring it. So essentially, I had made a video called Bitcoin Strategy with the ape on it, and I showed you how you could go from 5 Bitcoin to 75 Bitcoin, starting with 53 grand, went to 1,716. So Thursday, you got Adani, Credit Suisse, earnings, geopolitical issues, you got stops, you got margin calls, you got uncertainty, you got, you know, all this crazy stuff going on. And then you get Kraken settling with the SEC and saying they're not going to be doing staking. You have Brian Armstrong from Coinbase talking about staking, and you have people nervous in crypto that staking is not going to be allowed. And this also didn't just pertain to all of crypto, but Ethereum specifically. That's why Ethereum has gotten hurt pretty bad. And I can go deeper into the reasons why, but I want to make this about how to handle getting in and out of the choppiness. The markets will always be bumpy. There will always be media. There's always going to be something to scare the markets, okay? So these crosses are going to happen all the time. You just need to decide if you want to trade the crosses, or if you want to trade the crosses on what time frame, or if you want to just buy low and hold through the whole thing, which is totally fine. I like to protect my capital. So I choose the 1 hour, the 4 hour, or the daily, and when they cross, I like to sell. Okay? So for instance, just about everything except loop ring. Dash was another one that's still bullish. Another one that was bullish was Matic. I'll show you. Okay, Matic held out, and GRT held out. Everything else collapsed. Let me show you. ApeCoin. ApeCoin has the cloud going down. You should have exited ApeCoin on the cross right here at 586. Filecoin, it had the cross right here at 540. Zcash has been a mess. I don't even want to go through that. Ren had the cross over here at 9.5 cents. One Harmony crossed over here right about where it's at, a little bit higher. Okay, Engine crossed a little higher. We're coming back, and notice how they haven't crossed on the daily, but if you go to the hourly, see, it's already making momentum. So you would have bought back in at 44 cents and you're already at 45.5 cents. If you're trading the hourly, this is how you can trade in and out, long and short, all the time, buying low, selling high, and avoid all this chaos. Once you're used to doing it, once you're used to buying here at 46 cents and selling here at 51 cents, then you can get creative and you can go short. So you can go short here at 50 cents and you can sell here at 44 cents. And then you can wait it out till it crosses and buy at 44 cents again, and now you're in it at 0.457. So you could trade in and out on the hourly using the simple line chart. And you can also, if you want to do this for like day trading, you come down to like the 5 minute. And this is really good. You're going to trade a lot, but this is definitely getting in on the momentum and getting out before it gets too shifty. But you're not going to be like trend trading or anything like that. Now, going back to trading view, let's go take a look. Let's just go pull up Algorand. Okay, Algorand on the daily. Let me pull a couple things off of my chart real quick. Okay, so Algorand on the daily is still below the 200, but you're seeing sentiment come in. You have the green light, so that's positive. You are getting the, the pink seller diamond. You are getting the purple 5 to 9 cross. Okay, you are getting the HMA. You are getting the pink dot with the space between it. To me, on the daily, it looks like Algorand's going to come down, but you want to go do a health check on the other time frames. So it looks to me on the 4 hour, it's bouncing off the 200 and sinking. Although this is telling me that money and sentiment is still coming down. Let's go look at the 1 hour. The 1 hour is just starting to get bullish, and you can see how that matches up on the Webull one. So you could see how, look, it synced there. There's a blue dot low in the channel. This crossed. This is crossing low. This is blue. This is heading up. And at the very same time, there's your first blue candle. There's your green triangle, and you're heading up. So the way it works is on the minute, it has to get bullish on the minute to get to the 5 minute, to get to the 15, the 30, the hour. And the hour is a good medium play. Once you get above the 200 and this is green, or you're in Webull with the clouds, you're going long, okay? And then when they all close, you go short or you just take your money. This is how you buy in at the bottom, okay? And you get out at the top. So let me go to Webull and show you Algorand, just so you can see it. Okay, here we are on Algorand. If you're trading the 5 minute, you bought in here at 25 cents and you're at 0.257 now. You're just literally rolling it up. But on the hourly, you just crossed over here also at 25 cents and you're in the momentum trade for the hourly, which is safer because it's made it through all the time frames. On the daily, you're you're just now, it's really hard to tell. It hasn't crossed through. So you would still be in the trade actually if you were trading the daily. You would have bought in over here at 17 cents and you're just still in the trade dealing with the volatility. So it really comes down to you deciding what you want to do. Now, some of the things that I do is I will swing this on the hourly, okay? I'm in safe, I'm out safe. I get in low, I get out high, I take my money, I compound it. I also do the same thing on the 5 minute to go long, and then when it dips, what I'll do is I will hedge on the 1 minute, and this is a little bit more of a technical strategy. So let's say on the 5 minute, now this is a whole different deal. Okay, on the 5 minute, you have everything. You have the green lights, it's gonna populate your HMA, you are above the 200, and if I put labels on, which my version's messed up, so when I put it on, I might compress the chart, yeah. So I just want to show you, you're above the equilibrium, and you're also, if I go ahead and I put on boxes, you'll see that you're in the range. So the equilibrium is the middle between the premium and the discount zone. This is the premium, this is the discount, okay? Equilibrium is like a VWAP. So you're above the 200, you're strong on the 5 minute, you're above equilibrium, you're coming up to the premium zone, and look, it's starting to reject right on the premium zone. If it goes above, what's gonna happen is our blue discount zone is gonna move to here, and our purple one is gonna move probably to this next level over here, and it's gonna switch your range, okay? So what I'll do is if I'm up in the 5 minute like this, and then I'm watching the minute and there's a dip, like let's say this thing starts coming down and it goes pink, I will buy it to go short and I will hedge while leaving my long open, and then the next time it goes green, I'll just take my profit, take my hedge off, and let the long keep running. I know that's a little bit more technical, but it is something I do to protect my money. It's more of an advanced thing. Now, I want to show you another way that you can do this. Okay, so here, let me go over to the daily on Algorand. Okay, now we have this stuff built in. So we have our lines, and we can come over here and we can do zigzag lines. Okay, and on zigzag lines you have pivots. Okay, so it's gonna show the entire move. Okay, see how it shows the entire move, but you also can do pivot to pivot, like inside the structure. So boom, 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 inside. Those are perfect swing trades, okay? You can do the pivots. You can look at our whale institutional sellers and follow the diamonds when they buy and when they sell. The only thing with that is you got to be a little careful because they might have a different reason for selling that is different than your intention. So they might have to pull their money in at the end of the day, but that might not be your goal. So you can use the 5 to 9. You can choose your time frame. You can learn pivot to pivot. You can go directly off the bottom finders and the top finders, which are very accurate as well. Or you can use my sync system. No matter what, you have to figure a way to get out. A very simple way is just using a stochastic. And when the stochastic, it braids at the top, that's fine. But when it's up at this high level and it comes below like that, it's getting weak and then it starts to drop. So a stochastic's a really good one that you can use, and you can also just use the same things on each time frame. Like right now on the hourly, it's showing bullish. Okay, it's showing right now, you got your blue dot low in the channel and this crossed over. This is crossing over. The same time this one blue is crossing over. The same time this is crossing over. This is blue. Okay, so this is showing that it's getting bullish to the hourly. So again, if I went back over and I checked it out in Webull and I went to the hourly on Algorand, well, there it is. There's the cloud. And very simply, you just buy in right here at 25 cents and you're up almost a penny, and you just hold in there. So you just have to decide, do you want to trade a lot? If you do, pick the time frame and just don't go crazy. Just, have a handful of assets, 1, 2, 5, whatever. Just don't have like 30 things going, because green tides lift boats, red tides sink boats, and there's a lot of algorithmic trading and high frequency trading out there, and it's easier to manage if you push heavier into 1 or 2 trades doing this, and you put a stop in here no matter what, in case it just hits the fan, and you just monitor and wait for the crosses. You could be in the hourly for, I've seen it go for weeks, sometimes it's 3 days, sometimes it's a month. It just depends. So, do the same stuff, raise your stops, but things will come out on the news that are unexpected, and people will take profits and get shaky, and CPI comes around every month, and there's always stuff. So you can hedge it, you can get out on the crosses, you can pick your time frames, or you can just hold through the whole bull run and not worry about it. But there will always be choppiness, so you need a plan. If you don't have a plan, your plan is to fail, okay? So for me, I like on my high conviction ones that I'm swinging, I'll do it on the daily. Okay, so Algorand as an example. Actually, Algorand is a long hold. I'm not swinging it at all. I just bought it at the bottom, and I'm just gonna ride it forever. But let me find you one that maybe I don't have conviction in, like Gala. Okay, Gala is a good one right here. You bought in at a little over a penny, almost 2 pennies, but under 2 pennies, and you were in all the way until 5.5 cents too. That's a huge gain. I mean, that's over 100% gain on the daily. So on that one, I would just sell for sure, and then the next time it crosses, I would just buy in and compound my money, and I wouldn't probably short it. I'd probably just take my profit and wait, keep it in a watch list. Algorand, if I go back to Algorand, it hasn't crossed yet. I did buy low. I'm not really looking to sell this particular one. So you have to decide what you are willing to sell and trade and what you're not, and then what time frame. And you might just be all in on holding long term. If that's the case, we could show you how to do that with our indicators and strategies in our Discord. If you're looking to trade, this is a great way to do it. Just pick your time frame. You can do it all the way down to the minute. However, you're going to get chopped around on the minute. I'm just going to tell you. The 5 minute, I like verifying on the 5 minute on Webull, but I like to come to the 5 minute and use the Jedi green light strategy for safety. Let me just turn this off and make it a little faster over here. So I do like to verify that on the 5 minute that I have the green lights, and the next time it went blue was right here. So you bought in on this low candle right after a doji. There's your green triangle, and you're out of support. It's perfect. And if you look down the line, look down where my mouse is. Dot crossing, wave over, blue crossing, low crossing, blue. It's a perfect sync. All the way after a doji on a support. This shows and that shows you have a 96% chance on the 5 minute that this is going to turn into a good trade. When I say 96% chance, that's because I have a probability system, and the more rankings that you get, the more points you get. And so I just know it, and this is 96% chance that Algorand right now on the 5 minute is going to continue. The goal is to get it to the 15 minute, which right now it's getting above the 200, and the 200 is a big section of the point system, so you want that. Then when you get it to the hourly, that's when you're really safe. So right now on Webull, you just have the cloud, which is a big part. But if you want safety, you wait for these to go green and, all these other things get above the 200 and blah, 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 blah. So handling choppy markets is not just one simple way. It has a lot to do with your mentality, what you're trying to achieve, and how active you want to be. You do want to always have capital protection, guys. You always want to have stop losses in there. Remember, the stop is not in there to get stopped. It's annoying to get stopped, but you want to have it in there just in case. Like this wick right here, this is horrible. This is going to stop people, and it sucks. because people probably had their stop over here, and then this wick came down and closed all these people out, and then it rushed up. That's horrible. I hate that. But that's why if you have a high conviction, you're better off putting your stops way low on the daily or just above your break even and letting it ride for a while till it gets way up here, and then start putting it on your stops. You got to babysit the trade. Trade management is key. So you pick the time frame. You always have your stop in there. Just try to get it above break even, so no matter what, psychologically, you can never lose. Remember, the gains are not yours until you sell and realize them. If you have them in there and you're up 25 grand, but they're unrealized gains, that 25 grand is not yours until you sell. Okay? And then you have a partner, you got to pay taxes. So just getting your stop above break even and letting it ride depends on your strategy and your conviction and what it is you're buying. There's a lot of stuff I trade that I do not care at all about, and I'll do that on the 1 hour as an example. I'll show you a really good one right now. Okay, I'll show you this and I'll show you in a Weeble. Okay, so here's an example. If you're doing the 5 to 9 right here, it went as a blue cloud at 152. And you did have to get out over here at 310. That's 100%. It's a double. You get back in over here at 293, and you got to get out over here at 371. So that's, call it 80 bucks. You got to get back in over here at 351, and you got to get out here at 468. That's like 110 bucks. You got to get in over here at 408, and it looks like you get to stay in until right here at 680. So for 280 minus 10, so 270. Okay, so the whole thing, if you were swinging it with a few trades, you went from 150 to 685. That's like 450%. Let me show you in Webull the exact same thing. Okay, let's go to the daily. Let's find the same stock. And this thing is just now crossing over right now. In fact, if you would have bought when it went over at 482, you're already at 522 in one day. So you're talking about $40 gain. Okay, the last time it crossed was right here, 465 and to 541. You probably sold a little lower because by the time it crossed, this thing is diving. That's what I'm saying though. You pick the time frame. The smaller the time frame, the more active you are, but the lower price you'll get in at when the momentum is changing. The hour is a good midpoint. And you'll also get out near the top. So, you know, if you want to just ride this cloud the whole way, you certainly can do that on the daily, and it's really, really, really good. But you can also trade in and out like a savage. Like right here, you just buy in at 465 and you're here at 524. I mean, that's 35 plus 25. So 40, 50, $60. It's a $60 gain on the hourly. You bought in here and you're still in. And these are hours. So, I mean, we're talking about a day and a half, 60 bucks on the hourly. Now, another thing you can do is if you're on the hourly, you can do the 5 to 9 cross and you can do the stop 9. So you can every day, wherever this blue number is over here, you just every day that it passes or every hour, if you're on the hourly, you would do it hourly, you change your stop to whatever this blue number is. If you're on the daily, you change your stop to where the blue one is, 486. But notice how 486 is really low on a stop when you're at 522. So, you know, this thing is moving. So, I mean, there's a big difference between 603 and the time it crosses over here at 539. That's why I like to be on the lower time frames, because instead of selling here at 542 on the exact same stock, you actually sold at 601. So you sold $19 higher being on the hourly, and let's see where you would have entered on the daily. So on the daily, you're just now entering at 484, but on the hourly, you started your ascent actually down here at 434. $50 cheaper, you started swinging this lower, and $19 more you saved in gains by selling higher using just moving from the daily to the hourly. I know a lot of this is probably confusing, but essentially you need to figure out who you are and what you're trying to do. If you're going to be long, you need to understand how to identify bottoms, identify pivots, bottoming processes, and have some kind of indicator, like a bull run indicator or something like our Jedi green lights, and stay in the whole bull run. That's super good. There's nothing wrong with that. If you're going to trade, you just have to figure out, do you have the time to trade on the hourly, the 5-minute? If you don't, can you do it on the 4-hour? If you can't, this is a good method still on the daily. In fact, it's a phenomenal method. You make a ton of money. You can compound your money. Just go watch the Bitcoin strategy with the ape, how you go from 5 Bitcoin to 75 Bitcoin, and started with 53,000 and went to 1,716,000. So that's doing it on the daily. If you do it on the hourly, more trading, but that 5 Bitcoin probably would have been something like 90 Bitcoin. And instead of 1.7 million, you probably would have been a couple hundred, $300,000, $400,000 higher. But you're more active, you're trading a lot. So it just depends if you can do it. So I hope that this made sense, even though it's quite confusing probably. Hopefully I don't have to re-record it and simplify it, but essentially just decide who you are. Can you handle the volatility? If you can, and your goal is to hold long term, then you should have been focused on buying low on those pivots when I was saying on the Dow, we need to buy, okay? You should have been doing that with us, okay? And you need to know how to identify this stuff, okay? You need to know how to identify this, and you need to know how to identify getting out before it all comes down, if that's your goal. If it's not, then a lot of new things open up with trading, and one of the most simplest ways is to just trade the crosses on a lower time frame. And you know, a lot of indicators are really good. I like to use a sequence with really strange settings, and so every once in a while when they all sync up, it lets me know to go long, or with a high probability it's going to win. And it also, when they sync up, it lets me know with a high probability it's going to come down. And we also have these pink diamonds and blue diamonds, which are institutional whale buyers and sellers, so we can kind of see what they're doing, and that helps out, as well as a lot of other things on our chart. So right now, if you want to use our indicator, it's free for all of February. After that, you got to subscribe. You'll have all the updates, and you'll have all the courses, 101. You'll have the Wheelhouse Wednesdays. You'll basically have everything that we have, trade alerts and stuff. And we got a great community, so you can come in the Discord. That is in the description. And this is how you deal with choppy markets. You choose what time frame, what strategy, are you going to hedge? Do you work and you can only check it once a day? Make sure you use a stop. Follow the system. Don't cheat yourself on the system. If you're doing it on the daily for entry, then exit on the daily. Don't enter on the daily and exit on a 5-minute cross. Don't do that. Just follow the system and you can compound your money. And that's how you can deal with choppiness. You just simply trade crosses like that. You can tighten it on a 4 and an 8. You can do a 3 and a 6, but you're getting really, really tight and you're going to miss out on a lot of things. They're going to cross over and then bounce on you. You're going to get frustrated. So I think the perfect temperature is the 5 to 9. It gets you in low, it gets you out high, and compounding, if you were to follow it, it'll change your life. So my name is Chris. I hope this helped, and welcome to the Wheelhouse.